Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. In a short while from now, we'll connect with our fundamental as well as technical experts to guide you better. But before that, let's have a look at what the markets are up to. So Cheryl, the trend continues, the momentum continues, and all eyes on the IT earnings.
Absolutely, Shrishti, a very good morning to you, and all eyes on IT earnings, all eyes on the earnings season actually. Today you'll have TCS as well as HCL Tech announce their Q1 earnings. But look at the markets right now. We've recovered from the day's lowest point. At one point in time, there was a sharp dip coming around for the markets. But from there on, we've actually tried to claw back, and we are above that 19,450 mark for the Nifty. If you look at the Nifty Bank near the day's highest point, it's actually seeing some sort of a momentum in today's trading session. Remember yesterday, Nifty Bank was underperforming the benchmark indices. IT index, that's the sore point in today's trading session. You have IT earnings later this evening, but IT as a pack also is reeling under pressure. The earnings street estimates are not that gung-ho for the IT sector. So IT is something that you need to watch out for. HCL Tech, however, is near the day's highest point. So that's the way how the markets are looking like, Shrishti. And like you said, all eyes on the IT sector, and that will be the talking point.
Well, yes, absolutely. So we will watch out for that and get you all the updates. Both the earnings are expected post-market. It will be followed by a press conference as well. And tomorrow the stocks are expected to react much. But let's move on and kickstart taking all your stock-related queries, viewers. Just to note that you can connect with us live on a WhatsApp number that will be flashing on the top of your screen. You can write to us on our Twitter as well as Facebook social media handles of ET Now, and we'll try to get answers on the same. Today onto the show, we will be connecting with some of the management as well. So we are kickstarting taking all your stock-related queries so that we can take as much as possible. Let's start, and before that, let me welcome on board Kunal Bothra onto the technical side. As well as onto the fundamental take, we have Ashish with us. Very good morning and welcome to both of you. And taking the first query, this one is from Bhardwaj. And Kunal, let me take it up from you. This is, he's holding 570 shares of Tata Steel and sitting at a 10% profits right now. Wants to know, can he exit at this point in time or continue holding probably for the next 2 to 3 years?
Well, of course, I think if your time frame is 2 to 3 years, then you should definitely look to hold on Tata Steel. So, what has actually happened is that the stock has been an underperformer with respect to metal sector as well as with respect to large caps as such. But I believe it's just that off late you're seeing the metal pack coming into traction. Tata Steel has not yet given a breakout. So, when you look at this in price comparison with the peers in the same sector or with the peers for most of the large caps, the stock has been a big underperformer. So, I think in that regards, you should continue to hold on to Tata Steel and look to even dips if possible, because I think closer to 105 odd levels is a major support for Tata Steel. So closer it is towards that point, the better the risk reward is for you to hold on to your longs as well as add on.
All right. This next query that I have, Kunal, is also for you. A very good morning to you. Also good morning to you, Ashish. But Kunal, this one's for you. This one's from Leon. And he wants to know any swing leads that you have for him for today.
So any swing trades?
Yes, any swing
right?
trades. Yes.
Okay. So there are a couple of them. First of all, I think Eicher Motors is something which looks very attractive on the charts. I think the stock is confirming a very big breakout for itself, more on the reversal side. So I think now at 3,300 on the futures for the current month, that's a trade which looks very attractive. Look out for PSU banking stocks, and I strongly believe that many of these PSU banking names, the non-FNO ones, specifically the likes of Union Bank, Central Bank, Bank of India, etc., they are looking extremely strong and charged up on the charts. And they're confirming swing breakouts on the hourly chart time frame, which I think should get replicated on the daily charts. And from the FNO space, there is one stock which is also spicing up in terms of trends, and that's Sun TV. The stock is now at 475, 470 odd levels. Looks attractive for a potential target closer to 500 for Sun TV.
Okay, moving on, and Ashish, taking the first query from you, and this query is from V. Mathur. He's holding two names, two large cap companies. Firstly is Tata Chemicals. He's holding 100 shares at a price of 739 rupees, and the other one is Maruti. 85 shares from a price of 5,830 rupees. So sitting at a great gains, especially in Maruti. So at what price can he add more? Is there any advice to add more or not? And what's the outlook for the next 2 years?
Well, I think both have been very great buys, and I think there is no brainer in holding them. I think both are very nice blue chips, and both of them are doing well. In fact, we are suggesting Tata Chemicals buying even at this rate. So I think any declines can be used to buy. Maruti, the run-up has been very significant. So perhaps not at this level, but wait for a correction. I think auto pack generally has done very well. And I think at some point it will cool off. So whenever you see the Maruti kind of in a corrective phase, either time-wise or price-wise, there is a time when you can add. I think avoid right now, although future does look very interesting and exciting, but the run-up has been huge. Certainly hold on and you use any correction to buy. And in Tata Chemicals, you could start buying even at this stage. Try and buy on declines, try and get a better average, but you can start buying even at this stage. Maruti, I would suggest to hold on before you buy more.
Has come from Rao, and this one is for you, Kunal. He has 62 shares of Avenue Supermart or D-Mart at a price of around 4,099 rupees per share. That's his average price. He is suffering a loss from those levels. So he wants to know whether should he look to average or wait for the stock to rise. He has actually mentioned that he's a long-term investor.
See, frankly, the stock is a quality stock. There are no two doubts about it. But then, the short-term charts for DMart are not very attractive. The stock has, made a high of, I think, 4100, 4120 mark 2 or 3 weeks back. From there, the stock had fallen into correction, now at 3800 levels. I would not be too much attracted towards the chart patterns for DMart from a short-term play specifically. I think there could be more correction at play for the stock price. So I think even if you're a long-term investor, but purely if you ask me from a short-term kind of a view, I would suggest an exit on DMart. And maybe if you're looking to just buy back the same stock, then a better level to enter the stock should be closer to 3,500, 3,400 levels.
Okay, Kunal, once again coming to you, the next query is on one of the newsmakers for today, and that is Delta Corp. The stock was actually in ban, and if we see the momentum right now, the stock, the last time I checked, the stock was actually down 20, it's now down 25%. So the question is from Satya Veni, and he wants to know at this point in time, after such a sharp fall, can he enter in this particular counter, and what's the outlook? Okay, I guess we have disconnected with Kunal. If Kunal, can you hear us? Would you like to answer? Okay. Ashish would like to take it up from you. Any takes on Delta Corp after such a sharp fall? There's been no stopping since morning. And is this a time that in this fall investors can actually look into enter, and if there's any recovery of a thing, then they can probably gain?
Well, I think obviously the regulation has come down very heavily on Delta and other game companies, and I think it does change the outlook very seriously. Having said that, a 25% fall, I mean, look, we'll have to really see how the business goes from here. It will be a setback, but my best guess is that gaming and casinos will not stop here. And hopefully, I think there will be petitions filed, and somewhere the government will get to a little more reasonable level. I don't think 28% is too stiff and too dampening. See, if you are a conservative investor, you don't have Delta, just stay away because there's not a uncertainty still. But if you are an investor who likes to dabble in some risk, I would suggest that you can start accumulating because the company per se is pretty good, well established, the industry is growing. It's just a regulation, and 25% in many ways has factored in, I think, a large part of the setback. So I think another 5-10% lower, we would be in a very good buying zone. The good thing also is that the uncertainty, which was looming over this stock for almost 2 years now, has got over. So we now know that the tax is there, and we know what is the tax. And it can only kind of, normalize from here in the sense that the industry will adopt certain practices and the customers will also start accepting these gradually. So I think in a matter of time before things normalize. So if you are a long-term investor who likes to dabble in some risk for a higher return, this could be a very good opportunity. I would think that going against the market trend, a contrarian pick could be Delta, and especially after 25% fall. Start buying and buy in a staggered way on the way down. Of course, if you're a conservative investor who does only invest in these safe stocks, then avoid. It's not a
Absolutely.
very safe stock, but it's a stock where if the things do turn around normalize, which I
Right.
think will.
Point
So I
taken,
think it could be a
Ashish,
good,
on
a good point to start accumulating.
all right, point taken on Delta Corp. Kunal, coming to you then, and this one is coming in from Raja, and this is specifically for you. Nelco is what he's purchased at a price of around 785 rupees per share last year. He's asking whether he should continue to hold on to it or look to exit this counter.
Well, I think I would recommend other to hold on to the stock now. I understand that it's a very high beta volatile stock. I think in the last 6 odd months, there were 2 phases where the stock had corrected more than 50%. I think in just a matter of, a few months or so. So that generally determines that it's a high beta stock in nature. But then the last, 2 quarters of recovery is also quite strong. This probably brings in the fact that maybe after a volatile settling phase, the stock could now chart an uptrend for itself. I believe a modest target which you can keep for Nelco should be closer to 880-900 mark if you have a time frame which you can extend for say another 6 months to 1 year. So I would recommend to stay bullish on Nelco with a potential target closer to 900.
Moving on, and Kunal, once again coming to you. The next question is from Sonia, and she wants to know the prospects for Bank of Maharashtra at this point in time. Is this counter at a good entry level, and what's the short-term outlook on this one?
See, I'm extremely bullish on the PSU banking stocks. I think I have voiced my opinion quite a few times on the channel as well as on your show. My belief is that many of these PSU banking stocks are restarting or just about to restart a very strong uptrend from where they have left off in end of 2022. And I sense that there should be a significant upside for many of these PSU banking names. So it's a matter of patience as well as it's a matter of time frame on a positional play which is required. So I would recommend a buy on Maharashtra Bank. And as I mentioned earlier, that if you have extra capital which you can deploy for these PSU banking stocks, you should look to add on to a few names. Something which I recommended earlier like Bank of India, Central Bank, PMB is also looking at as an attractive mid-cap end of the PSU banking stock. So the more diverse you are, the better is the chance that you could probably get a significant upside on the entire basket of PSU banking stocks.
All right, staying with banking then, Kunal, this one is from Satya from Hyderabad. He's holding 60 shares of HDFC Bank at 1,509 rupees per share. He wants to know whether he should add some more, approximately 40 more stocks in his portfolio.
Well, technically, yes. In fact, Cheryl, on the daily charts today, so as of now, which is mid-session so far, the stock is forming a bullish candlestick pattern. So after 4 or 5 days of consistent selling, for the first time there are some positive chart patterns which are emerging for HDFC Bank, and I think that should probably augur very well for the stock over the near to medium term. And also in terms of the quality, I think the stock is undoubtedly one of the best quality stocks from the private sector banking names. So I think both these aspects in terms of timing as well as in terms of the quality, it's a stock which you should continue to maybe buy on dips as well as look to add even at current levels.
Okay, moving on, and Ashish, coming to you for your take on 2 IT majors. Subrata Mukherjee from Kolkata wants to know at this point which one is a better buy. Would you go for HCL Tech or Infosys or maybe none of them?
Well, I think I can go for both of them, but I think now to answer the question, which one is better, in terms of pure corporate governance and acceptability in the market, Infosys is certainly the darling and will go ahead, will be more short. HCL Tech, for whatever reason, does not get the the discounting which other IT majors get. There are still some concerns about the corporate governance and the cleanliness of their management practices. So if you really have to choose one at this stage, because it's a beaten down sector, I think you should go with Infosys.
That's the take coming in on tech companies, especially Infosys, and what should you do. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Baina Sarna on ET. Now let's continue taking all of his stock-related queries, and this one is actually coming in from K. Venugopal, and he wants to know, Kunal, at current levels, can you look to buy Escorts Kubota as well as Adani Power?
Well, Escorts Kubota, yes, you can look to buy the stock at current levels. 2,316, I think, is where the stock is trading right now. Looks to be an attractive chart. In many of these tractor names like Escorts, Ashok Leyland, etc., these stocks have started to pick up pace as well as try and play a catch up on the short term charts with respect to many of the other peers from the auto sector. So looks attractive. Adani Power, I would not recommend to buy, even though the stock has been trading now, I think, at a fresh multi-week, multi-month low for itself, because the chart patterns are completely into a downtrend. The stock made a high or a top which was closer to 300 levels just about in the last month, and now the stock has come back towards 241 mark. So even in the best of the market times, when a stock underperforms and corrects so sharply, it's not advisable ideally to try and chip into these names. So I would advise and avoid on Adani Power, but I think Escorts is something which you can look to add even at current levels.
Okay, moving on to the next question then, and Ashish, coming to you for this one. This question is on First Source Solutions, and the viewer named Kabir Bedi has purchased 1,500 shares at a price of 130 rupees. Wants to know the outlook on this particular counter.
Well, I think the company is doing quite well. The outlook is positive, so I would suggest he can stay invested. I don't see any reason to worry at this stage.
All right. This one is coming in from Shamala and writing to us. Shamala is writing to us for a long-term query on Polycab, approximately for 3 to 4 years. Wants to know whether it's good time to enter the counter or wait for correction. What's your take on this one, Ashish? Do you think that she should actually dabble into this counter?
Yeah, I think she should. I think company is doing very well. It's one of the great ideas in the home improvement theme, and the acceptability of the product is very good. They have done very well over the last few years, and we see the same thing looking forward. So I think it's a very good stock idea. I think you should go ahead and use any declines to buy into, and there's very good stock to hold in your portfolio.
Okay, Kunal, coming to you for the next question. This question is from Vinod from Bangalore, and he wants to know what are the prospects for Gujarat State Fertilizer, that is GSFC. At this point in time, can he enter in this particular name?
Well, I think it's a stock or a chart which has a lot of potential for a big breakout for itself. Now, I purely look at this as a long-term play. So on the line charts, when you look at the charts for GSFC, the stock is on the verge of completing a very strong continuation inverted head and shoulder pattern on the quarterly charts. So I think closer to 170 or 65-70 is the breakout point of this neckline or the neckline of this inverted head and shoulder pattern. So this is a very strong indication that the long-term trends are about to reverse or come back into positive for GSFC. So that itself is extremely positive. I would suggest that if you have a longer term time frame and if you're okay with adding on to a few of these high beta stocks, then I think GSFC could be a good bet at current levels.
Another one coming your way, Kunal. This one is from Nalini Jindal, writing to us from Patiala, and she wants to know about Piramal Pharma for 1 year. Should she look to buy this one right now?
See, the only concern with Piramal Pharma in terms of charts is the paucity of price data because of the very recent history for the stock price. But nevertheless, I think it's a excellent chart, at least in the last 2-3 months. Piramal Enterprise is something which I'm extremely bullish on. So my sense is that maybe Piramal Pharma could also pick up in a very similar kind of a price manner. Difficult to anticipate, as I said, from a long-term play. But yeah, from a short-term basis, Piramal Pharma is something which you can look to accumulate. Even Piramal Enterprise, as I flagged off, could be an interesting bet from current levels of 940, 950 where it's trading.
Kunal, once again coming to you because this one is specifically for you. The question is from Ghosh Dada, and what he's saying is that he's sitting at a huge cash right now and he wants to invest in some of the counters. What he's already doing is accumulating stocks like SBI, HDFC Bank, Reliance and ICICI Bank. Any other name that you wish to highlight for him where he can invest his money?
So I don't know. I think whether you've mentioned ITC, but I think that's a stock which you can look to consider at current levels from the large cap universe. As I mentioned, maybe Eicher Motors at the current time could also be at a good point because the stock is going through a lot of negative news flow, chartically or technically. Many of the indicators are extremely oversold. So the risk reward, the timing could be a lot better for Eicher Motors at current levels than what it was maybe a couple of months back or maybe 3-6 months back. So that's one of the stock which you can look to add from large cap universe, specifically Eicher Motors.
All right, so that's the take coming in on Eicher Motors. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. More on the other side, don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, the next question, let me take it from you, Ashish. The viewer wants a medium-term outlook on Deepak Fertilizers. He has bought 125 shares at a price of 2,164 rupees. What's your view on this particular name?
Well, I haven't this stock lately. I don't
Ashish.
want to comment on it.
Okay, Ashish, I beg your pardon. The stock name is Deepak Nitrite, not Deepak Fertilizers. He has bought the shares at a price of 2,164 rupees. Do you track this one?
Yeah, Deepak Nitrite, I am very bullish on. I think the stock has gone in for a fair amount of correction also in the last year and a half. I think it's a very good time to re-enter. I think the stock looks really good at this level for a buying opportunity.
Okay, this one is coming in from Sagar. He's writing to us from Zurich, and he has been a long-term viewer of Buy Now, Sell Now, though he's writing after a while. His query is actually on hospital space. Ashish, he's saying that he has good stakes in Narayana Healthcare, Rainbow, KIMS, Medanta, as well as Apollo Hospitals. He wants to know what's the near-term outlook for the hospital space as a whole, and if you have made any estimates with regards to the margins or the growth numbers for these companies.
Near term, one can't say much because, of course, some of these stocks have also run up a lot. But I think generally, yes, the long term looks very good. We still have a huge way to go as far as penetration of good hospitals is concerned. I haven't specifically studied on the margin front, but I think Max Healthcare, Apollo Hospitals, Narayan Hrudayalaya, these are very good stocks to be held in your portfolio.
Ashish, let me take it one more query to you. This question is from Anjali, and she's holding 60 shares of M&M from a price of 1,300 rupees. Wants to know, should she book profits in this particular name? And she is also holding United Spirits 80 shares from a price of 860 rupees. What's your outlook on both of these?
Well, I think United Spirits you could continue to hold on. I think the story unfolding. The alcohol market in India is going to keep expanding, and United Spirits is a clear leader. So as long as time is not a constraint, continue to hold on to it. I think this is a good long-term growth story and very good stock to have in your portfolio. Regarding M&M, see, auto has had a great run. So I think it is cyclical. Although the very near term looks very nice, but it is at the end of the day a cyclical industry. It does go through its highs and lows. So M&M partial profit booking you can certainly do at this stage. Take advantage of the run up and do partial profit booking.
Kunal, I want to check with you if you track this counter Hindware Home by any chance, because Rajan has about 500 shares at 430 rupees per share. He wants to know what should he do with this one.
No, I don't track the stock, Cheryl, so won't be able to recommend.
Ashish, do you track this one by any chance?
No, I don't track.
All right, let me take the next query then. And this one is coming in from Karishma, writing to us from Delhi. And Kunal, she's a huge fan of yours, is what she's mentioning. 500 shares of Cipla at 900 rupees per share is what she purchased on your guidance, as well as MRPL at about 75 rupees per share. She's making profits in both of these counters. She wants to know what should she do now, hold or exit?
See, MRPL you can look to exit because the stock has an inherent tendency of being very, very high beta. So you have to be making sure that these are the kind of high beta names which you can categorize specifically for short-term trading. So if you get maybe 10%, 15% like what you're getting on MRPL, that should be a good enough profit which you can look to put aside and book profits and then park your money back towards large cap names. For Cipla, this could be an interesting turn of events. The stock is still going through a process of recovery. So, we can still not say that the stock has come back into a strong uptrend and then it's recovering or trying to recover from the sell-off the stock had seen start of 2023 from a point when I think the stock was at 1200 to a point when the stock was sub the 900 mark. So it's still into a recovery phase. I would probably give it more time, say another 2 or 3 months. Let's see how the stock pans out. If the stock happens to cross about the 1100 mark in this leg of rally, then we can expect that this could be a big turnaround for Cipla. So as of now, hold, but watch it closely over the next 1 to 3 months. If the stock happens to come closer to 1100 mark and assuming if the momentum fizzles out, we should tend to book profits over there.
Kunal, coming to you for next one, and this question is from Guru, and he wants to know, can he buy NMDC at this point in time and any short-term targets to look at?
But yeah, NMDC you can buying from a short-term play if you're looking out for, which I believe could be maybe a week or a couple of weeks. Then 112 could be a target which you can keep for NMDC. But if you have a time frame which is 1 to 3 months, then I believe you can keep a target range closer to 115 to 118 for NMDC. It has a lot of resistance on the way up because it had a lot of resistances on the way down. So it's going to take a lot of time for the stock to surpass those levels on a very convincing kind of a basis. So it's better that you try and keep smaller targets for NMDC. Even if you're looking to trail the stop losses, then do it in a very staggered manner for the stock.
So it's coming in from Vinod and Kunal. This one is for you. He's saying that on June 30th, he had asked you a query about BSE. He had about 500 shares of BSE, which he purchased at around 430 rupees per share. And you advised him not to exit his positions and stay put with this one. So now he wants to know whether he should look to sell it since there is a buyback at a price of around 816 rupees per share, and the stock is continuing to see an up move over the last few days. So what should his strategy be now? How should he actually take this one?
Well, yeah, I do remember that recommendation which I had given for BSE. But what has happened is that the stock has gone through a different level of uptrend now in the last 2-3 months. I remember, I think from 400 where the stock bottomed out in the month of March end, the stock is now almost at 800 levels, so 760, 775 levels. So which means almost like 100% recovery for BSE. But what has happened is that on the short-term charts, the indicators have gone through extremely overbought territory, which means that in the next maybe 1 week, there could be a sudden cool-off which can happen for BSE. So it's always better that since you're sitting on some excellent profits on BSE, it's a good time to start taking out at least 50% profits. If possible, take out more than 70% profits as well, and then look to trail the stop loss for your remainder quantity. Maybe keep a trailing stop loss of 720 as of now, and if the stock keeps on moving up higher, trail the stop losses higher.
Okay, so that's the advice coming in on BSE. But with this, viewers, we have to wrap taking all your stock-related queries onto the show. It's thank you so much, Kunal, as well as Ashish, for joining us today on Buy Now, Sell Now, helping all our viewers with their stock-related queries. But with this, viewers, it's also the time to slip into a short break. But you don't go anywhere because we'll be right back with more news and updates on the other side. Stay tuned.
Well, Max Ventures recently launched its first luxury project in the Delhi NCR region, and it's flying off the shelves because we have already seen the pre-sales, launch of almost 1,800 crore rupees, which has been already done in the first few days itself. Let's try and decode that, plus how the fundamentals of the real estate sector are panning out. We have with us Mr. Sahil Vachani, the MD and CEO at Max Ventures, joining us on the show. Hi, Sahil. Thank you so much for making time and speaking with us.
Good morning. Thank you for having me.
Sai, let's begin with this latest launch of yours. It's literally flying off the shelf. Talk to us about when do you see the project commissioning? What are the other details? When do you expect it to completely sell out?
Thank you. So we have launched 1 million square feet at our first residential development in the NCR region. The project is called Estate 128. And we're delighted to share that 100% of our inventory has been sold in the pre-formal launch phase. We have been able to get an average realization of 18,000 rupees a square foot. As I said, it is completely sold. The project is expected to start construction in the fourth quarter of this calendar year, and we anticipate to complete it within the RERA timelines of 4 years or so.
Wow, that's something 100% sold out. But given the strong traction that you're seeing in the luxury and the premium segment itself, are you likely to focus more towards these verticals? And is that the case how you are choosing your land parcels as well?
So we have already stated our strategy, which is to grow by 1 million square feet in both residential and commercial every year. If you see, we had acquired this last year, and in addition, we have also got a piece of land in Gurgaon, which we are intending to launch in the next calendar year. That will be about 2.5 million square feet of development on residential side, which is going to be the first intergenerational community that will come up in the National Capital Region. In addition to that, we've already started work on 2 commercial projects, one in Noida and one in Gurgaon. So yes, we have a pipeline of about 3.5 million square feet of residential and about 3 million square feet of commercial. And we will look to continue to grow on the same lines as we have committed, which is 1 million square feet both for commercial and resi every year.
It's quite an ambitious target and you're on track for that. But just wanted to understand, will the focus continue to be on the NCR region for the time being, or ultimately you would like to diversify out of that micro market?
We will continue to focus in the National Capital Region. We believe that there is a big market here and we need to establish ourselves on a very firm footing. So we will continue to focus in the National Capital Region in the years to come.
Sahil, but what about the funding of this rapid expansion, the 1 million per year kind of targets that you have in mind? Do you already have the funds in place? Would you be looking at maybe partnering with someone or raising the equity at maybe some project levels or consolidated level?
So we've managed to raise equity already. If you see in Max Ventures and Industries over the last 4 to 5 years of almost 14 to 1500 crores of equity. We raised that combination of a rights issue that we did in 2018 with the exit of our packaging business in 2 tranches through which we raised 800 crores and bringing in New York Life as our co-investor around the office on the office space projects. So we've raised a significant amount of equity which has funded all of this growth. And I'm happy to share that all our land parcels are funded primarily with equity. We will take limited amount of construction finance during the construction phase, but all our land acquisitions will continue to happen through the equity route.
Okay, so the funding is already in place and large part will be through the equity route itself. But Sahil, what about the top line potential given the slew of launches that you talked about? What kind of growth rate should we expect on the top line for the company, let's say for the next 1 to 2 years?
Like I said, we are continuing to focus on 2 asset classes, which is the commercial asset class, under which we have Max Towers, Max House, which are completely built and leased, and Max Square that's come on stream recently, that's undergoing leasing currently as we speak. So there's going to be a balanced approach of a residential vertical, which is going to be about 1 million square feet a year, and a commercial portfolio that is going to be an annuity or a rent yielding portfolio. So we are looking to build the portfolio with a combination of both of these moving forward.
I was looking to get a number from you with respect to the guidance of top line, but I appreciate that. Nonetheless, I just wanted to understand from you, do you expect this the year FY24 to be better than FY23? And I'm talking for the entire real estate industry here. Given the fact that there were these headwinds of interest rate hikes, etc., there was a worry that demand might plateau. We haven't seen anything of sorts right now, but overall, what's your expectation for the entire industry?
So we are seeing a significant consolidation, that trend that has been going on for the past many years, and we are continuing to see that towards more institutionalized, organized developers. So we are seeing a trend towards that. B, we are seeing that there has been a focus on end customer experience and the quality of product. So there has been a shift to or a flight to quality, as we can call it that. So we continue to see that for those players who are adopting these two or fall in these two buckets, where they are either moving their products towards a higher quality product, or they are corporate institutionalized developers with a very high level of governance. We believe that the market for those in these two buckets will continue to be very strong and do well.
Okay, consolidation is the name of the game. But Sahil, since I have you with us, I want to discuss the commercial real estate also a bit. Given the headwinds that we are talking about globally, the corporate behavior has been a bit muted. Are you seeing any sort of impact in terms of your occupancy or the tenancy or the rentals?
So two things. One, we are seeing occupancy come back. So we are almost seeing in our occupied buildings 75% of the full occupancy of the building, which is similar to pre-COVID levels. So we are seeing that from an occupancy perspective. From an operator perspective, it is clear that there are a couple of trends that have now, at least in the early stages of looking like they are being established. The first is acceptance of a hybrid work model, where it's okay to work from home a couple of days a week. And companies are preferring for employees to come back into the office for a few days in a week at least. As a result of this, the co-working or the managed office players, that demand for those we continue to see rising. The second.
All right, so that is the management of Max Ventures. But let's move on and let's understand about MSCI Index August rejig announcement, which will be out on August 11th. But what stocks or which stocks are expected to make the cut this time around? Let me bring on board my colleague Somit to explain it to us. Somit?
Well, with the MSCI review, August 2023 review just around the corner, there's a host of stocks that one needs to keep an eye out for. Firstly, the official announcement regarding the exclusion and inclusion of stocks are expected to come in on August 11, but the cutoff to decide the same will be early next week as per. Now, as per the brokerage, Power Finance and HDFC AMC are qualifying to be included in the index, while Cummins India and IDFC First Bank are on the borderline. Now, for Cummins India and IDFC First Bank to get included in the MSCI Standard Index, the brokerage is expecting a 5% rise in the share prices. Then only these two stocks could get included in the index. Now, Ashok Leyland remains one of the tricky names because because the brokerage is saying that this could be a special case inclusion in the MSCI index. Now, other stocks that would need at least a 10 to 15% run up in the share prices for getting included in the MSCI index for August 2023 review are Polycab, Macrotech, Tata Communication and Astral. The brokerage is also saying that these stocks could be a potential candidate to get included in the November review as well. Now, one stock that will definitely get excluded from the index is ACC unless and until there's an 8% up move in the share prices. And one stock that we need to keep an eye out for is IndusInd Bank. Now, this stock was expected to get included in the MSCI index, but the June shareholding pattern that has came out yesterday evening reveals that the FPI room for inclusion is at a lower side. Now, FPI room is at around 13.5%, while the FPI room should be at around 15% to get included in the MSCI index. Now, IndusInd was supposed to get included in the index because as per the March shareholding, the FPI room stood at around 14%. However, that has come down to 13.5%. Hence, IndusInd now won't get included in the MSCI index in the August 2023 review.
Okay, thank you so much, Somit, for highlighting all the stocks that are in focus on the back of MSCI rejig, on the back of Nuvama reported. A lot of counters reacting to it. Ashok Leyland is actually up 2.5%, while stocks like IndusInd Bank are facing some pressure in today's trading session. But with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me and Cheryl and the entire team who put this show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.